Hey, good morning. Let's go over today's trade plan. So in the overnight session so far, sellers have been in control, and heading into the open, we're going to be using 28.5 to 30.5 as the micro bull bear zone. As long as ES holds below that area, sellers would maintain control, and a break below 25.75 could accelerate the downside into the 19.5 to 21.5 initial support zone. And first test of that zone can still result in attracting responsive buyers and can result in a bounce back up towards the 25 to 27 area. But if the market is really weak heading into it and there's a lot of momentum, then eventually even 19.5 to 21.5 could give way. But considering that the larger time frames are still bullish, even as we head lower, buyers can step in at the key support ideas. So 19.5 to 21.5 is the key support in the event of a continuation lower. So if ES holds below 28.5 to 30.5, continues bouncing at the lows here, and then liquidates, 19.5 to 21.5 would be the next key inflection point where buyers could step in. Below that, we have support at 15 quarter, minor support there, and then key support is 2010 to 12.5. And again, first test of that zone can result in a pretty decent bounce back up towards the 18 to 20 area. On the upside, if we can break above 28.5 to 30.5, the first inflection point is 33 to 35, and that area is resistance, and first test of it can result in, at the minimum, a rotation. So we just want to be aware of that. But at that point, that strong downside bias that we've seen in the overnight session would no longer really be there. And if the market continues to hold above 28.5 to 30.5, then we could be balancing and making our way back up to the 37.5 to 39 area, which is the all-time high in ES. And again, first test of that zone can still attract sellers, and the market can end up being pretty balanced in that scenario. So off the open, the focus is really going to be on this 28.5 to 30.5 zone, the micro bull bear zone. At the same time, we're going to keep an eye on the other markets as well. TF has a important high volume node around 1168. So, if we get a break and a strong move below 1168, that would just confirm the strong downside momentum and the strong selling in this market. In NQ, holding below the 71 to 75 area would just confirm that we do have some decent sellers active in the market. And again, in the S&P, 28.5 to 30.5 is really going to be the key zone that we're going to focus on. And if the market does break above it, then we just have to be a bit more cautious on the short side and perhaps even look for a long setup. But in both scenarios, if we do break out above, we still want to be conservative on the long side because given the bearish bias that we've seen in the overnight session, even if we break above 28.5 to 30.5, the expectation is not for a strong directional move back up to the all-time high. It's likely that the market will still have some struggle at 33 to 35, kind of balance out a bit, and at that point, we'll look at momentum and see if there's some strong upside momentum. If there is, then perhaps we can look at buying a pullback and targeting a move up to the gap fill at 36.5. But if things are looking quite weak, then it's going to be better to be conservative on the long side. So right now, the focus is going to be more on the sell side below 28.5 to 30.5, targeting a move down to 19.5, 21.5. That's a potential long setup, targeting 25 to 26. And from there, the market could just start balancing. On the upside, 33, 35 is the main resistance area. So those are really the main ideas. There is not any main or major econ report due on the day time frame today. So, once we do get some directional movement, then the market could just start balancing in a wider range. So let's see how well the sell side maintains control below the bull bear zone, and we'll take it from there.